Everybody, we are live. It is December 15th, 2021. Can you believe we are midway through the last month of the year in 2021? It seems like it's moving so fast. Welcome everybody to the program. We're going to talk the Fed, and we're going to talk a lot of other things today having to do with monetary policy and why I think the Federal Reserve is absolutely bonkers. We'll get into that here in a moment. The title of this is The Federal Reserve's Monetary Policy is Absolutely Delusional. They have gone full lunatic asylum, and we are going to talk about that. We'll let everybody get loaded into the chat before we get started. Welcome everybody to the program. Remember, super chats are open. You can click the super chat, ask me a question, highlight it, and I will see it right here on my screen. You can also ask questions in the regular chat, and I'll try to answer as many of those as possible. A lot going on in terms of economic events. We've got more economic news coming up, so I'm going to continue to do these breaking ones. Today, I wanted to do a breaking live to get you guys in to talk about it because I was so astounded by the news that we had today. I had to do it live. It's not something where I just wanted to record a short video clip. They have gone full nuts, and it's not something I would have predicted right now. I thought maybe in another year, or 6 months when the inflation data got really strong. But just like I said, I have been saying the inflation data was so strong, and I just said it the other day on the channel, that I expected the Fed to pull up interest rate hikes and address tapering, but they've done it more aggressively even than I thought they would. They've gone full lunatic asylum. We'll get into that here in a moment. Welcome Neil Hahn to the program. Fatana Renja, Rodrigo Pace, Ralph Potts is here, Lawrence Sawicki is here, Brandon Baker is here, Kenneth Martin, as always, is checking in. Electric Dynamic Org is here. Leaf Hayes is here. Al Mack is here. Lots of people in the chat. Thank you, everybody, for joining. We're going to get started on it. I will get the share up and running. And you guys probably are asking the question, what the heck are you talking about? If you haven't been paying attention to the news today. Today at 1:30 Central Time, 2:30 Eastern, the Federal Open Market Committee of the Federal Reserve held a press conference, and they talked about what their policy would be for interest rates for the monetary system and tapering or reducing their asset purchases or their quantitative easing of debt purchases in the system. And that's big because it's how the economy is going to go. The central bank creates booms and busts. I wrote it in my book called Drop Shadow, The Truth About the Economy. It came out in 2009. The central bank creates booms and busts with its monetary policy. So we have to look at that monetary policy to know, are we going to do better or are we going to do worse? Now, since 2008, 2009, we had the last financial crisis, the Great Recession, as they called it. The Fed started quantitative easing programs. They lowered interest rates basically down to zero or effectively zero. They're now 0.08 right now, which is effectively zero. And that led to a boom. It led to stocks going up. It led to real estate prices going up. It also led to the destruction of the middle class, who saw their wages not increase with the inflation that we're now seeing. It led to the top 1% gobbling up most of the inflating assets. It led to all-time valuations in the stock market from a P&E perspective, which I've talked about is going to reverse. It always does, dating back to 1871, creating great wealth destruction. And it's going to lead people into a lot of economic pain. We're going to have a big crash. Now, I'm not predicting when that will happen. I've said it may be by the middle of this decade, but with this policy that the Fed is now enacting, it could come sooner. They moved up their policy. It could come sooner. So let's talk about exactly what they talked about. And I'm going to give you a little bit of what Powell said, just opening up the conversation.
Good afternoon. At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals, the Federal Open Market Committee kept interest rates near zero and updated its assessment of the progress that the economy has made toward the criteria specified in the committee's forward guidance for interest rates. In addition, in light of the strengthening labor market and elevated inflation pressures, we decided to speed up the reductions in our asset purchases. As I will explain, economic developments and changes in the outlook warrant this evolution of monetary policy, which will continue to provide appropriate support for the economy. Economic activity is on track to expand at a robust pace this year, reflecting progress on vaccinations and the reopening of the economy.
So he goes on to talk more. I'm going to summarize what he said because otherwise we could be listening to him talk forever. Here's what he said. They're going to reduce their asset purchases by 30 billion a month until in March when they're gone and they're at zero. Okay, this is in contrast to what they said last time when they're going to soften their asset purchases by potentially up to 30 billion. And then people said, well, they're softening, you know, the potential for, and people didn't believe they were actually going to do it. I got a lot of crap on my last video covering the Fed's policy announcement saying, Rob, they didn't actually taper. They didn't taper. They didn't taper. And I said, I think they're tapering. No, they said that they could, and it was soft, and I don't think they're ever going to do it. Well, fast forward to this one in December, and they pulled the damn rug out underneath this system. Okay. They are reducing asset purchases by 30 billion a month until March when there will be no more. In addition, he said in press conference today that they expect to raise interest rates up to 0.9%, not quite a percent, but up to 0.9 by the end of the year. Now they're 0.08 right now. So that would be an 11-fold increase from where they are now. Overall, it's not a lot because 0.08 is next to nothing. So 0.9 is not huge, but the fact that they're going to do a series of interest rate raises throughout the year, at the same time they're stopping their asset purchase program in March, means that they're doubling down. Now, originally, a lot of the Fed governors a couple of months ago in these Fed meetings had basically told the press they think that they're probably going to raise interest rates in June and they're going to start to taper a little. They pulled that all the way forward, raising interest rates as soon as Q1 of next year and tapering out their purchases by March, by the end of Q1. And when asked the question about whether they would do both, Powell didn't say we have to wait to the end of the tapering to raise interest rates. So they could start it ahead. Now, he also said in a question near the end of the press conference, they were asking for clarity about how they would do it. What happens if the economy starts on a downturn? Would you continue the interest rate hikes? He said, we can adjust it. So this is just guidance for 2022, right? If the economy starts to tank, they could adjust that program and then lower interest rates again. They said they're going to watch it. But at the end of the day, what they're not acknowledging, what is really stupid, is they're the reason for the economy being in its place right now because of their easing policy. And as soon as they take that punch bowl away, the economy is going to panic and people are going to panic. They need the low interest rates to continue this Ponzi economy, and they need the asset purchases to support the treasury market because a lot of our foreign partners are dumping treasuries. Net, they're buying less. So if the Fed's not buying them, who's buying them? And that's going to be a major issue. That means the debt's going to get harder and harder to finance. Interest rates are going to have to spike up to entice people to take on that debt. It's risk on in the bond system right now. If this policy continues, if they do it by March and they stop they taper down, they stop asset purchasing, it's going to be risk on in the bond market. I wouldn't want to be a bondholder right now with this news. All right, we have a super chat from Dumb Money Media. I love seeing the scripted questions JP gets and watching him look down to read the pre-prepared response. Haha. Yeah, he does. And he's also referring to his notes because he brings a bunch of notes with him to the podium because they'll ask a question, I think the guy from Bloomberg said, you guys don't have any built-in inflation expectations for next year. He said, actually, we have 0.4%, which is a lot. But yeah, a lot of it is scripted, of course. You know what they're going to ask anyway. I mean, there's only a few questions they can ask. What are you going to do? You're going to raise or lower interest rates or keep them the same? So it's all kabuki theater. You're right, Dumb Money Media. It's all kabuki theater. It's all show. That's all it is. But the effects of this are what I'm really worried about. And then we have another asinine policy from the government coming up. We'll get to that here in a moment. I did take a poll over Twitter, and I actually did over YouTube community as well, but the YouTube community one got deleted. Don't ask me why. But I asked this morning, about 3 hours before the press conference, what will Powell and the Federal Reserve announce this afternoon for their 2022 central bank policy? And this is what you guys answered. There were 119 votes. You said they'll do a rate hike in March with tapering. Those were the closest, although that wasn't the most popular answer. The most popular answer was rate hike in June and continue tapering. The least popular was a March hike with no tapering, and the second least June hike with no tapering. So these guys were the closest March rate hike and tapering, 40.3%. Congratulations, you guys win a prize. You guys were right. Well, how's the gold price reacting? Well, gold's up slightly. It was negative down, I don't know, buck something, or somewhere in that range when Powell came on. Now it's trading up $6. Gold's got a little tiny bump. Silver was in the red. Now it's up 12 cents at 0.56%. Not major moves. You would think with the news that gold and silver would just be going absolutely bonkers. Of course, they're not, because the idiots in the derivative trading on the COMEX are trading futures thinking this is not going to happen until next year. So there's not a lot of consternation about it. But man, if I'm going, 6 months out, 9 months out, a year out on gold and silver, I'm wagering there's going to be higher prices. The last time the Fed tried to raise interest rates 2 or 3 times, we had that 20% stock market correction. Okay. If they try to raise them 2 or 3 times again and get close to that 1% mark, are we going to have another correction, 20%? It's entirely possible. And remembering they're stopping their asset purchases at the same time. This is huge. Nobody thought they would do both this quickly. And I thought that Powell would eventually get here. His academic background, he is not one of these central bankers that wants to print forever. He's wanted to rein this bad boy in for a long time. The problem is his timing. We needed him 20 years ago, not today, because now when you do it and you pull that support out from the economy, then you're going to have some pretty major issues. Checking the chat, guys. Welcome, Raymond is here. Ramond is here. Chris Brune is here. Stray Dog at Play is here. Dude Boy is back. Brandon Baker is here. John Bethea is here. Last living old cowboy. Cowboys never die. That economy, not so much good content. This is Cowboys Metals live stream. You're here talking about the Fed's decision, or the announcement today at 1:30 p.m. Central Time, 2:30 Eastern Time, that they're going to stop tapering. They're going to phase it out through March of next year, and they're going to raise interest rates to 0.9%. At the same time. Hey, Dude Boy, how you doing, buddy? Looking here for questions in the chat. I don't see a whole lot. You guys put a super chat down there if you're interested. Lots of comments. Good to see you guys here. We got about 200 people in, which is pretty good for the middle of the day. Thank you guys for showing up. Appreciate the support. I don't see any big questions there. Oh, there is a quote from 𝙂𝙊𝙇𝙀 from Powell. A cyber attack that would take down a major financial institution or financial market utility would be a significant financial risk that we haven't faced yet. Powell, yeah, that is one. And people did ask about cyber attacks. They did ask about Omicron and the COVID variant. It was interesting, Powell's comments. It's the magic virus, because he attributed in his speech, and you guys can go back and watch it. We had the video up there. It's on their YouTube channel. He said, due to the virus, he blames that on some of the economic activity. The magic virus causes everything, and it's always used as this crutch for any decision anybody wants to make, or the explanation for anything that goes on. Nobody actually wants to tell the truth and say it's the Fed's policies, especially over the last 50 years, but especially over the last 20 to 30 that's caused the problem. That's the problem. And it's us issuing, the Treasury issuing too much debt. That's the problem. It's the fiat debt money system. And of course, they're not going to say that. They're trying to control the collapse. They're trying to manage it. That's all that they're just managers of this ship that's sinking. They're managers of the Titanic on the way down. That's all they are. They cannot, they cannot keep the Titanic afloat. They can't stop the flooding. They've already hit the iceberg. They're just managing this down as best they can. So don't be fooled by what they say. Greetings to our New Zealand mates. We have one in the chat. Good to see you on. So here's the second piece of news that had me concerned. And I'll get to that in just a moment. Sorry, guys, my controls have gone a little bit wonky. We will get right there for you guys. Here is what had me basically concerned. It was the announcement that the government is raising the debt limit. We had, I think, 14 Republicans come over to side with the Democrats to pass a simple majority, which then allowed them to get it passed with 1 or 2 less votes than they needed. And I think it's going to be about, 2.5 trillion debt limit increase. They say that will fund the government through 2022. So the next raise will come in 2023. And the president is expected to sign it by tomorrow when it crosses his desk, which tomorrow they would run out of money, said, I think, Yellen, Treasury Secretary. So they had to get it done. They did. And here's the problem. You have more debt coming at a time in which the Federal Reserve is going to stop buying it, okay? And at the same time that they're raising interest rates to slow lending. does anybody see a problem here? And to slow the economy, does anybody see a problem here? How are you going to finance the higher debt ceilings? The debt ceilings never fail to get raised. There's a lot of jawboning that goes on in kabuki theater in Congress, but they always end up raising every time. If you notice that, they've never failed to do it. They wait till the 11th hour, they make a big thing of it. Somebody compromises somewhere, and then they raise that bad boy and you get more debt, but it's never any other outcome. And it was funny what Powell said in some of the questions. People were asking him questions after the press conference. And he was chatting that, yeah, he admitted that while unemployment, we have max unemployment, in his speech, when he was asked a question, he did say, yeah, the labor force participation rate's not good. And we always refer to labor force participation rate. The unemployment rate, after a year of people not finding a job, they just disappear off of that. So all it does is it looks at current state of unemployment. In other words, it's not an overall measure. It's just like a rate of change measure. And it's misleading because you don't see the big bucket of unemployed people. If you look at the labor force participation rate, you see it's down the 62, 63 range, which is horrible. It's worse than it was back in 2008, 2009, before we had the economic meltdown, the Great Recession. We were at 66%. So we've actually, over the last 12 years of this easing policy, lost an additional 3% of people employed that want to be employed. And Powell mentioned this. He said, yeah, we have weak labor force participation. So Powell knows what's going on. Powell's not a stupid guy. I keep saying that. He's not stupid. He's the manager of the Titanic. He's managing expectations. He knows this thing is going down. He knows labor force participation is weak, but he'll say things like, well, incomes are really high. The consumer's in really good shape. Households are in good shape. In the same sentence, he says, but we have all-time highs in debt in households. Okay. So he knows what's going on. It's like code. You have to decipher the code. He's telling the reporters what they want to hear, but if you listen and read between the lines, he's also telling people who are awake and have the ability to understand how all this works that, yeah, it's the Titanic. It's going down. Prepare yourselves. And that's the one thing I like about Powell. He has to give off this "we're going to be okay" vibe, but he'll tell you the truth in there somewhere. And, you know, it'd be nice if he come out and say the whole thing's going to collapse, but then it would. It's a confidence system. So he can't do it. He can't say it's going to collapse. That, in fact, would cause the collapse because it's all a con game. It's a confidence system. So he's got to put nuggets of truth in there for you to pick up on. And I thought that was very, very interesting. We've had a bunch of support coming in over the super chats. Thank you, everybody. Dumb Money Media says, I'm very curious to see how Reggie Middleton DeFi patent will work broadly. It affects almost all companies and transactions, banks, crypto exchanges, and stocks. It's going to be a wild year. Yeah, he has 𝙬𝙬𝙍, which was designed to facilitate financial transactions outside the banking system. The SEC has tried to come down on him. I don't know the whole story. I think the system doesn't like DeFi or 𝙬𝙬𝙍, nothing to do with Reggie Middleton, not saying anything bad about him. I hear he's high integrity, seems like a great guy. Love to have him on the show sometime to talk about it. I have nothing negative to say about it. The government doesn't like it because his system is basically set up to circumvent the traditional banking system. 𝙬𝙬𝙍 did a $15 contribution through the super chat. Thank you so much. I think I did answer your question. If I see another one, 𝙬𝙬𝙍, I'll come back in. Clements Consulting. Did I hear Powell say we're at full employment? Then why do we need BBB? So he said we're at full employment on their mandate for full employment. In other words, to justify his policy, he has to use the U6 number, the quote unquote unemployment number. And yes, they expect, and they said, and had a little chart during the presentation, the first 5 or 7 minutes, they expect unemployment to hit 3.5 next year. But that's the U6 number. That's not labor force participation rate. That's currently unemployed. In other words, because we have so much current demand for jobs, not historical demand, not enough that would pass historical need, but current demand for jobs are currently unemployed that just became unemployed is lowering. But the labor force participation rate measures what I call structural employment over time. It's all the adults that have fallen off the rolls that the government never even counts anymore because they can't find jobs. There just aren't enough jobs in the economy. Those are like the permanently poor, if you will. And he did mention that. So Powell did mention that. So he needed to use U6 to justify his policy action. If he used labor force participation rate, he probably would have been fired because that tells the true story. So you have to listen to the way they use the numbers and what they say. Steve Rossholm says delusional and will destroy the economy, or deviously clever and will destroy the economy so that a desperation population will accept their CBDCs. I think the Fed knows what's going on. Yes, they've designed the CBDCs to be the new system. They know it's ending. I don't blame this all on Powell. This started a long time ago, 1913. long time ago. And it's no good to blame the current Fed chair. Not even Yellen, not even Greenspan. This started way before them. They're all complicit, okay? And again, Powell and the Fed governors are now managing the sinking Titanic into the central bank digital currency era. That's what they're doing. But I don't think the CBDCs are quite ready yet. They're still proof of concept. They're doing their testing. The US is behind. China's ahead, followed by Europe, then the US and the UK. The US and UK are behind. They're not, that's why the system's not ready to crash. It doesn't mean it can't crash if they lose control, but they have to manage that crash until they can get into CBDCs. Otherwise, people may use private cryptos like Bitcoin, Ethereum, Litecoin, and goofy stuff like Dogecoin, and they may go to gold and silver. They don't want that to happen. They've got to manage that Titanic down until CBDCs are ready. That's a good comment, Steve Ross. Thank you. $5 from 𝙂𝙊𝙇𝙑𝙀𝙍 in New Zealand. Thank you to our New Zealand mates for joining. Love when we do these early ones and the guys overseas can hop on with us. Appreciate everybody. Oh man, we've got so many people in. We're trending toward about 300. Thank you guys for joining. This is the Federal Reserve's monetary policy is absolutely delusional. This is a Cowboy Medals live stream. Normally I'll do a regular breaking, record it on camera and throw it up. This is big. This deserves a live. This deserves interaction with you guys. This is going to be huge for 2022. Reducing asset purchases by 30 billion a month until the end of March, when they will have none. They will be net neutral, and raising interest rates from 0.08% to 0.9%, 11-fold increase from the current by the end of 2022. And a lot of garbage in the news conference designed to confuse people, while Powell intimated the truth in there. If you listen to what he said, this is why I know the Fed knows what's going on. If you listen, if you don't just look at the headlines, but you listen to the whole conference and you listen to the way they answer questions, Powell knows what's going on. But he didn't have a choice. He's screwed. Honestly, he's screwed. The whole system is screwed. And that's why I wanted to bring it to you guys. This is going to accelerate it. I don't know if we're going to have the big crash next year. This is a relatively modest policy. I mean, they're stopping an additional 90 billion of asset purchases. It's not the end of the world, but it is something pretty substantial. And raising interest rates to just below 1% is not going to kill it right off the bat. You know, last time they got it to like 2.5% or 2.75 when we had a 20% stock market correction. So this could be the slow managing the Titanic down, trying to slow down, you know, this overheated economy and address inflation without crashing it. And if you listen to Powell's comments, the second time I mentioned it here, he said in one of the answers to the questions, if the economy starts to downturn, they'll reverse policy or they can change policy. They said what they're doing. They know the Titanic's going down. They're managing it. They're going to watch it every month, and then they may change policy if they need to at any point in time. And that's what they're going to do. I don't think we'll get the big crash next year. It could be wrong. The economy could be so fragile at this point. Any amount of action by the central bank could crash it. But more than likely, this just is designed to slow inflation. It's designed to reduce the dependence upon the Fed. You know, from a bond perspective, it's going to put huge pressure on the market overall. This is the start of the end. Okay. This is where you go from accommodative policy to non-accommodative policy and tightening policy, but they're going to do it. It's going to go up like this. They're going to flat like here, and then eventually going to go like this. And when you start to get this down where they get more aggressive, I think it's where it's going to crash. The market will react, however. You see interest rate rises probably in some of the treasuries. You do see gold and silver going up very modestly right now. You will see companies change their approach and how they finance their business. It's going to affect things. It will definitely affect things. But we're gonna cover this. Don't worry. I have said for at least a year this is what's coming based upon who Powell is. But it was put off by the pandemic. It was put off by some other things, and so it happened a year or so later than what I probably expected. But it's happening now, and this is the end of this system. This is a big marker in the end of the system. All right, going to the chat. I think I've covered all the super chats. Thank you, everybody. Gary McCollum is here. Anyone here lived through the 70s? Ralph Potts says, yes, but I was a kid. I was born in 74. So I do remember it being very hard to finance a house at high interest rates. And I grew up in a single parent household in the 70s. My dad died when I was young. My mom had remarried. That didn't stick. And just me and my older brother, my other siblings had moved off. But it was very hard. We had our house on a fixed rate mortgage, which saved us. And it was only like a $400 payment back then. We moved down here, I think in 75 to the Dallas-Fort Worth area. $400 payment, fixed interest rate. We survived, but I remember my mom complaining when I was growing up about higher prices. She would go, when we went to the grocery store, she'd freak out at prices. So I remember that time. All right, what else we got going on? More questions, more questions. If we are sinking, they won't throw us a life jacket. They'll throw us a 1,000-ounce bar of silver. I wish they'd throw us all a 1,000-ounce bar of silver. Could we all use 1,000? If everybody in America got 1,000 ounces of silver, assuming we had it, which we don't, if we went to every person in the world, there's less than an ounce available. But if everybody in America get 1,000 ounces, we might just survive this darn thing. You know, you just take a knife and start shaving it off and pay for stuff, and you'd actually have an alternate monetary system. That's why they'll never do it. Neil Hahn says the CBDCs have failed 3 times in trials. Yeah, I think they've got lots of issues. CBDCs are not there. That's why they got to manage that Titanic down, guys. They got to manage it down. More tons of comments. Thanks everybody for joining. We're almost at 300 people. Love to see you guys here. Thank you for supporting us. Thank you everybody for supporting the channel. We're doing a live today. The Federal Reserve's monetary system is monetary policy is absolutely delusional. The monetary system is not delusional, it's evil. You know, just bad ending to the year here. Going into the holidays, we want to feel good. I had a feeling the Fed was going to get aggressive. We had 9.6% producer price inflation in November. We had 6.2% consumer price inflation. We've been talking about the rising prices coming since January, and we started to see the commodity complex spike up. We've been talking about it all year. It has forced the Fed's hand. I've said this as early as 6 to 7 months ago. That's what we're seeing now, but they even went farther than I thought they would. And let's put up the poll I ran today. Guys, it's interesting to see. It's interesting to see what people thought was going to happen 3 hours before. Most of them thought, nah, we'll stick with the June rate hike and some easy tapering. Some people said, you know, March or June hike, no tapering. But what we got was here. A rate hike maybe even sooner than March. I don't think they really clarified that. They just said 0.9% by the end of the year. We'll see what they actually do. He said that it would be flexible. So we'll see what they actually do. But this was the closest. These guys, you guys were the closest. Good job to you guys. 119 votes on that. Gold price up 586. Yeah, that surprised me. It's not higher. At the same time that they're raising the debt ceiling and all this debt just gets lopped on top of the time that the Fed is stopping their asset purchases and raising interest rates to make it more expensive to issue debt. What's that going to do to the economy in 2022? I want to hear your guys' questions. I want to try to do my best to answer them. I want to see what you guys think. Thank you for all the people that support us on the super chats. A lot of talk about how it's going to get worse and how it's going to get, and how, one comment here from Crystal Clean. What are you talking about? This is what the market expected from the FOMC. No, it wasn't, because yesterday on CNBC, they said, we expect a gradual tapering and maybe 2 interest rate hikes in 2022. That was CNBC last night. They did not expect interest rate hikes all the way up to 0.9% and an ending of the tapering. That's not what I read on any article. So if you have an article, post it there in the chat or send it to me. I'll look at it. But I didn't see anybody who thought that they would be this aggressive and do both things at the same time. There's even a question for Powell after his press conference in the question and answer session, which they said, wait a minute, you're going to do this in the same year? We thought that you had said, Fed and Powell, that you were going to wait till the tapering ends to raise interest rates. You're basically affecting them and do them in the same time period. So I don't think the market expected this. I think people were quite shocked due to the questions we got afterwards. All right, Once in Exile is here. What other questions do we do? No new questions in the chat, guys. Oh, how bad will it get? Worse than you can imagine, because it will have to be for opposition to their CBDC to have diminished enough that people are desperate enough they accept any solution. 𝙂𝙊𝙊𝙍. Yeah, I think it needs to get worse before people select the CBDC. So again, this isn't the big crash. I want to make that clear. This is the beginning of the reversal of the 12 years of monetary policy, which led to us getting to this point. So we're at the apex of that monetary policy. Now they're pulling it back. We're sliding down. We're going down that slope. But you kind of start slow, and then it's like on a roller coaster. You kind of get up and you kind of go slow, and then it's like boom, And that's the way it's going to go. So I do think we have some time. You have some time to prepare. Now is the time to prepare. Prepare, prepare, prepare. I can't say it enough, guys. I'm going to be providing more content going forward next year, starting in about the second month to the third month of the year. We're going to broaden the platform. We're going to talk about a lot more than just gold and silver and economics. I'm hinting at this over and over. It's the second time I mentioned it. We're hinting at this. So we're going to have an expansion of coverage. A lot of guys don't know my past investment history. I've invested in just about everything on this planet. We're going to broaden our investments portfolio. We're going to start talking about other stuff because pretty soon when this market crashes, you're going to want to rotate into those assets. We're going to prepare you for that. So stay tuned for that. We'll announce more on that later. I don't want to give too much away. Thanks everybody for joining. We have popped over 300 on Cowboy Metals live stream, live 3 p.m. Central Time in Texas, broadcasting from the great state of Texas, talking about the Fed being absolutely bonkers and at least surprising the market with how aggressive they are. And again, at the same time, the government has just passed an additional $2.5 trillion debt limit increase that will get us through a whopping 1 year, ladies and gentlemen. 1 year. Let's share that again for you guys. This is straight off of CNBC. 2.5 trillion will get us 1 year, and then 2023 we got to do it all over again. At the same time, the Fed is stopping their purchases of this stuff and raising interest rates, making it more expensive to issue this stuff. Gold and silver are not going bazonkers right now. That's because the derivative traders are basically idiots. Okay, I hate to say it, they're idiots. They're only looking at the next 2 to 3 months. This has nothing to do with what's going to happen the next 1 to 2 to 3 years. You have to understand that. The smart people are taking gold and silver off of the market. Let's look at NYMEX deliveries. Okay, you want to see NYMEX deliveries? Let's take a look at NYMEX deliveries. Monthly, we're going to look at gold and silver, and it is a boom. Here's gold futures. December 2021 on the COMEX. We started off 95.81. Then on December 1st, we had 17,206. We're now at 33,000 deliveries of gold contracts on the COMEX. What about silver? Is silver big? Didn't we say that this would be a big delivery month in both gold and in silver? So in silver, we're sitting at 8,450 contracts. This is almost a high in silver for the year, not quite, but this is getting very close to the high in gold deliveries. These smart people, ladies and gentlemen, are grabbing the big gold and silver stores, while the derivative traders, the morons, are saying, yeah, this is not a big deal. We'll trade gold up, $5, silver up 10 cents. Okay. The metal and the derivative markets are different. I've said this time and time again. Don't pay attention to the gold and silver prices. Look at what the wealthy are doing and taking delivery. They know what's coming. Watch the wealthy, follow the money. That's what matters. Chase Wilson, wasn't there a world simulation with multiple countries about a cyber attack on big banks? Possible bank account wipeout soon. Yeah, there is, because cyber espionage. I know I was in cybersecurity for a long time, have a master's in information assurance. This is basically cybersecurity. I graduated 3.95 GPA and worked in the industry for a tech company, a Fortune 15 tech company, doing risk assessments and security work for a number of years. And yes, I can tell you that cybersecurity has become a big issue. And yes, we get cyber attacked every day. And those exercises that people like the WEF and all these cybersecurity teams participate in are preparatory exercise for what's coming. Yes, we have cybersecurity warfare ongoing. And it started back when the internet first started. I hate to tell you guys, it's been ramping up since the early 1990s. It's gotten really bad over the last 10 to 12 years. And yeah, that's what those exercises are for. And yeah, the banks, the schools with all that information and that intellectual property, any financial institution, anybody that has any trade secrets, any companies developing a product, the military are all going to be targets. And we have cyber war going on right now. I've said that the third world war has already started. It started on the cyber front. On the trade front, to some example, with China doing the Belt and Road Initiative, okay? And the other nations like Japan and Australia and the US doing the Blue Dot Network, there's some trade wars going on. We saw that during the Trump administration. Cyber war was the first part of the Third World War. Whether we get into hot war and how that manifests, I don't know. But yes, we're in the Third World War. It's just being played on a different battlefield. So that's a good comment. Thank you, Chase. Joanne Runk says, what about the crypto response? Overall market cap in crypto is up almost 5% in the last 24 hours. So my thought on crypto, most of this is speculation and washing transactions, stuff like that. Yes, on news, crypto will trade. A lot of it is pure speculation. It will come back down. What happens there is you have the big players pumping it up. They dump it on the small players. Most of the time, that's how the crypto trade goes. It's all speculation, and it's all the big guys taking advantage of the little guys. You can see it in the flows. You can track the blockchain and the major currencies. It happens to Bitcoin, Ethereum all the time. Do people truly right now believe that these two, especially the top two, Bitcoin and Ethereum, believe that those are safe haven assets? I don't believe it. I don't believe it based on the flows, based on the holdings and the way that that occurs. Could they become safe haven assets to some people? Yeah. Are they to some people? Yes. The majority no. Could they become safe haven if the stuff hit the fan, much like gold and silver? Possible. We'll have to see what happens. Right now, they are not. The flows tell the story that does not lie. I don't give a flying crap about the price of Bitcoin or any crypto. You look at the flows. The flows tell you what's going on. And the flows tell us it's not safe haven asset right now. It's speculation. So that's a good question. Dumb Money Media, besides from the last interview I did, literally none of the younger tech streamers are worried, study the economy. We're doomed. Yeah, the young guys don't know. The young guys just assume that everybody has everything in hand. It's because they haven't been through tribulation before. The older generations remember the tribulation. Remember conjunctive wave theory, spring, summer, fall, winter. About every fourth generation, you have this big financial event, really big one. We haven't hit our super big one yet. It's about 80 years since the last Great Depression, a little, give or take. And that's about the time that you start having the next big financial crisis. We started in 2008, 2009, they staved it off. But now they know it's going down. They're managing the Titanic. That's why they're doing the policy changes and they're introducing CBDCs. This will be a big one that gets us into a new monetary system, and that's coming. Oh, thank you everybody for coming to the chat. We're up at 340. We could run this all day, guys. I'm just going to answer your questions and respond to you guys. We've already talked about the Federal Reserve's monetary policy. Just to recap, they're reducing tapering or reducing down to zero their asset purchases by the end of March, and they're raising interest rates from 0.08 as it stands now, the federal funds rate, to 0.9% by the end of 2022, unless they see a big downturn, in which Powell said they could reverse that, but I don't think they will. And I think this is where we've got to the peak of money printing and Fed intervention, and it's going to start coming down. And eventually you're going to see that economy start coming down as well. That is my theory that has played out over time. Thank you guys for joining. Mutant Ryef is in the house. Good to see you here, my friend. Fat Vegan is here. Juan Crespo. Sarge is here. Good to see you here, Sarge. Heinrich Joblom. Rob, read up on the Von log 4J. It's a major thing. CVSS 10. Ooh, I will do that. Thank you for giving me the CVSS. I will definitely read up on that. Appreciate it. Maybe we'll even do a show. I haven't done a lot of cybersecurity stuff. This is a gold and silver and economic channel. The cybersecurity stuff people haven't paid attention to. Now I think there's a bigger appetite, so I might do a cybersecurity episode. Just from my experience of being in cybersecurity and what I learned in school. I went to school at Norwich University, which is a private military academy. I wasn't in the military, but they allow civilians, it's private, have to be in one of the armed forces. So we had government types. We had the NSA types in there. We all had 3-letter agencies, Homeland Security. We had military types, had people from the Navy intelligence in my class, stuff like that. Man, the stories that you talk about in that group of people is astounding about what's going on in cybersecurity. I could tell you tons of stories. The ones that I can tell you, some that I, in any case, we may do an episode on that. Miles Nelson says tearing down the Fed will be more epic than tearing down the Berlin Wall. Oh yeah, on a scale of about 50,000 times more impactful. The Berlin Wall was big, not putting that down or downplaying that for the German people and for the East and the West in Europe, and what it meant for communism, for capitalist nations to surge forward and capitalism to find firmer footing. But yeah, I mean, we're talking the reserve currency of the world. It's going to be huge. It's going to be huge. Thoughts on why they would grant the patent for Veritasium? Honestly, I don't know. Good question. It's not my area of expertise. I'll research up on it and maybe put something out on a future video. I'm not going to speculate. I don't know. Maybe they want to steal it. A lot of times when governments do things, they let things work in the private sector, and then they take it and then to make it illegal to run the private sector, and they take the technology. It's what they've done with the private cryptos, which are basically sort of the basis for their CBDCs, although they're not decentralized. But maybe that's what they're doing. I don't know. I'm speculating. I really don't know the answer to that question. Good question, though. The only thing about the paper prices and metals is a negative effect on the corresponding equities. Chris Brune, I agree with you. It does affect the equities, but think about it this way. You're getting them cheaper. If you're getting it cheaper, isn't that really a good thing? It's an additional buying opportunity. Yeah, if you want it now, I do see where that's kind of a pain in the butt, because you're not going to get your higher prices now. And we want our higher prices. But what that does is it creates a buying opportunity for us guys. And isn't that what, at the end of the day, what we want? I think that's what we want. I think that's good for us, you know, in the long run, to be able to buy those equities at really cheap prices. Most of them are trading way below the net asset value of the mills on the ground. The ones that are producing are not getting, you know, the valuations for the cash that they're throwing off. Yeah, I mean, it's a big deal. But at the end of the day, it doesn't really matter. It doesn't really matter. So I'm gonna see if I can put up a gold chart. This may take me a minute, but looking at like the GDX and GDXJ and stuff, let's see if I can do it. And it may take me a minute, so we can show the lag. Yeah, at the end of the day, it's good for us to be able to buy these equities cheaper. And it's frustrating, but it's okay. It's okay. All right, let's see if I can get the GDX in here. Oh, it's not letting me graph out the GDX. Let me see if it's $ GDX. Sorry guys, I'm having trouble with my charting package. GDX, or we're just going to put GDX price. Oh, I got you. And we got it behind the price update. Here's the GDX. Let me make it a different color and I'll show you guys what I mean. I want to show you guys what I mean. I got it. All right. I got it. I got my chart ready. Here's a chart. You guys want to see a chart of the equities? This purple line is the GDX. This black line is gold. In about 2016, gold started recovering. The equities, as measured by the GDX, did not. How about we do the 𝙂𝙊𝙇𝙍? Let's add the old 𝙂𝙊𝙇 in there. And let's get it behind the price, and let's make the 𝙂𝙊𝙇 bright orange. All right. See, I got to learn my symbols. Aha, it's the $𝙂𝙊𝙇. We don't put a $ in front of GDX, we put a $ in front of 𝙂𝙊𝙇. Okay, here we go. So here's the 𝙂𝙊𝙇. It's even worse off than the GDX. Okay, both of those mining indexes have never recovered proportionately to what gold did. They were trading above gold leading all the way up to the high in 2011. Then they started crashing down. Then it almost mirrored it to about 2016. And then gold recovered. Look at these equities over here. They haven't recovered. The equities never recovered. It's a buying opportunity because they're going to, and they're going to shoot through the gold and silver price when they recover. And yeah, it sucks now. If you watch your portfolio every day and you're in a lot of these mining stocks, there's only a few that are outperforming. Most of them aren't, and it can frustrate the hell out of you. But if you understand the generational wealth opportunity you're creating, you don't care. You shouldn't care. Don't worry too much about it. They're going to do well. Once that gold price pops, which it will because of the Fed announcement today, then the equities will come. It'll lag by 3 or 4 months probably, and then it'll start to come. You'll see them come. So don't worry too much about that. Kathleen McKeon is here. She says, many in government are affiliated with the party. People are offered to join to switch to failed capitalism to communism. They say so. Good comment. Fatana Renja, is that underperformance similar to management expense? The miners have costs. They have costs. Some of the costs are going up, yes, but they're still profitable. They're still profitable. They're still making money. So at least they should be trading at their net asset value at the least. And they're not. Until the day that they're not profitable, then you can discount them. The fact the market's discounted is because it's not love. The money flows aren't going in. I know I look at the junior mining funding index available at Orn Inc. My friend Kai Hoffman. Go look at that. We're half of where we were in 2011. People aren't investing in it, right? The indexes right now, the miner indexes. That's why the prices are down. They're not investing in it. It's okay. It'll come. It will come. Question from Dumb Money Media. Think another way of direct stimmies will happen close to next year midterms. Got to buy those votes, baby. Yeah, potentially. I mean, they're doing the earned income credit for having kids. That comes into my bank account. The reason they know my bank account is because it's where I pay my taxes. I do the auto file, the whatever it is, the electronic pay. So now they're turning around and putting money directly in my account. I don't want it. I just don't, we'll settle up at the end of the year. I just don't want them direct injecting anything into my account. It's just creepy. But yeah, I think they could do more stimulus. And think about it, the government doesn't care about debt. They just raised the debt ceiling another 2.5 trillion. What if they decide they need stimulation to stave off an economic collapse? Because the Fed is doing this policy. The Fed could reverse policy, but they don't want to. Remember, they're managing the sinking ship of the US dollar fiat system into CBDCs. You don't want the Fed to announce policy and then back off. They're going to make them look stupid. You don't want to lose confidence in the central bank while it's all burning. You want to maintain that confidence. So yeah, the government will come in here and maybe inject some money somehow. That's entirely possible. Yeah, we'll see what happens. That's a good question. Fast Eddie, the whole system is going away. Everything is going to be destroyed. Your bank account. I agree. The bank account as it currently exists is going to be destroyed. The US dollar as it currently exists is going to be destroyed. If you don't have gold and silver, your finances could be destroyed. Bill Delahunt says, check out a gold chart from 1972 and 2021, and then Bitcoin 2019, 2020. They're the same chart, so it's so strange. Yeah, because Bitcoin hasn't been around for as long, and we'll see what Bitcoin does long-term and the cryptos do long-term. There's not enough data on them to really draw any conclusions, in my humble opinion. Dominica says, send that money to me, Rob. I'll dispose of it appropriately. I'm sure he will. Scott Cole comes in with a contribution. Super chat. Thank you, Scott. If we get a reset with the end of the Fed and central banks, it has to be a PM-backed currency, right? Would such a reset wipe out debt? I think the gold is going to capitalize the banking system, but they're not going to give it to the people. So yeah, the commercial and the central banking system will be backed up by gold. That's why they've been net purchasers of gold for a long time. That's the significance of them formally putting into Basel III. Even though gold's always been an asset, they really talked about it in Basel III as a signal to, hey, get your gold. So the gold will capitalize it, but these central bank digital currencies themselves are not backed by gold. So for everyone they issue, you're not having a gold coin or a gram of gold or whatever, or even a gram of silver or an ounce of silver. What they're going to do is say it's good. The gold is going to be revalued. When it gets revalued, it'll bolster the bank's balance sheets, but it's not backing the central bank digital currencies. You're not going to be able to exchange your central bank digital currency for a real a precious metal asset. There's no way in hell they're going to do that, because there would be a run on it so fast it'd run out. They wouldn't have any. But the way that they are going to value themselves in the central bank digital currency system is how strong the banks and central banks' balance sheets are, and gold's a big part of that. So are going to be holdings of their own currencies and other people's currencies, digitally. And so are going to be other assets like stocks of the various banks in the system. That's how they do it now. I don't expect that to change too much. Crystal Clean says, do you believe markets are going to crash? Why buy miners? Miners get destroyed in market crash. That's actually not true. If you look at a chart, and Crystal Clean seems to not be in favor of the miners, which is fine. I don't care. Honestly, I don't care. You can do whatever you want. I'm not your financial advisor. The last time we had a market crash in 2008, 2009, the mining stocks went down temporarily and then shot through and outperformed the rest of the equity indices. So that's a fact. You can look it up. I'm not even going to bother to argue. Look at other points in time too. Look at other times in which we've had financial trouble and look at how the mining stocks react. Yes, they immediately go down as people liquidate, and then they go up and they shoot through not only where the rest of the equities are trading from a valuation perspective, they shoot through the base precious metals prices are going. They outperform because they're a levered investment. Those are just simple facts. You can look it up. I'll tell you, go look at charts. You can see it and graph it out yourself. Go graph out some of these mining indexes, 2008, 2009, and see for yourself how they reacted. The data's out there. I use stock charts, by the way. I just showed stock charts. You can use stock charts. You can use some freebie ones, but tons of charting packages out there for you to simply just put the indexes in there and look at them, and you'll find that out. Good question. Thank you so much. Alex Flores, are numismatic coins worth collecting? In my opinion, this is my opinion only. I'm not your financial advisor. Do not do anything that I say here. Do your own research, all that good stuff. That being said, I do think so, because if you look at charts of rare coins and ultra rare coins, they do extremely well most of the time. And they outperform the bullion when the bullion's doing well, especially in times of shortages. When you have a shortage of physical bullion people can't get, they start buying up the collectibles and the numismatics. So the numismatics do have some downside risk. They can lose value faster than the bullion. They'll never be worth less than whatever gold and silver are in them from a melt value perspective, because you can just melt the coin if you wanted. But most of the time, these collectible markets do very well. They do very well. Go to a coin show, talk to people. Since 2018, when I bought my numismatics, because numismatics had hit a little bit of a trough, to now they've been my best performing investment. They've outpaced everything that I have. They've been awesome. Now it's not always like that, but most of the time they do pretty well. If you look at like I think it's a PCGS, is it 3,000? It tracks the top 3,000 coins or 300. I don't remember. Look at those charts. In fact, let's see if I can bring one up. Let's just answer this question while you're here. I think it is the 3,000 rare coin index. I got it. I got it, my friend. There has been some downtrend, but let's look at the PCGS 3000 index. The PCGS is a ratings agency where they will rate your coins. Yeah, there was a spike up in, where is that, 89 to 90, and then it came back down, but overall it's up. So overall, in fact, they're very steady. There's only been one big spike. There hasn't been a big crash. Now, this is just the top 3,000 coins. It's not all numismatics. But I mean, that gives you an idea of what it is. You can see stocks go up and down. You see Bitcoin go up like this and then crash down and go up and crash, go up and crash. If you want something a bit more stable, go here. Now, if you look at 10 years, it has been trading down, but coming back up. That's because of the shortages in the metals in 20. And in 18, it was down here and I bought it. It's up here. So I've done very well. I expect it to continue to go up. 3 years, it's a nice cycle. So they go in cycles like anything else. 1 year, the numismatics have been absolutely murdering it. The basic gold and silver indexes. So they go up and down like anything else, but they're actually relatively more stable than the base precious metals most of the time, with certain exceptions. So from my standpoint, yeah, I like them. But it's up to you. You have to make your own choices. Yeah, the 1922 Morgan that you bought, Sarge, could go up in value. Now it's speculation, but it could. So just pay attention to it. Last question from Dumb Money Media. Do you think silver will ever be confiscated like gold? No, because not a lot of people own either physical gold and silver. I think they'll tax it. I kind of said this before. The more effective way is to tax the hell out of it. To make you report it, to make you scared and force you to turn it in because you thought, oh my God, I have to report it. That just scares people when you have to report stuff on forms, especially IRS forms, freaks people out. Because all the financial managers say, no, you got to report it, don't. But I think they'll just tax the hell out of it. Not enough people own it anymore. They effectively did that, was it 1933 or whenever FDR did that executive order. They got most of the gold out of people's hands. And then you forbade ownership from, what year was it? Until, what was it, 1974? I forget. I think the year I was born, you could start owning precious metals again. So for like decades, they just took it out of the hands of people. And that's why people don't have it anymore. So if you own any, I mean, you're in the minority. They're not going to go door to door. It's not cost effective. They'll just try to get you to give it up other ways, other policy measures for trying to get you to give it up, to fear you, to demonize you, to tax the hell out of you. Be expecting that to some degree, but not as many people own gold and silver anymore. All right, dudes, this is going to be it. We hit over 300 and some viewers. We had a lot of chat revenue today. That really helps the channel, by the way. It does cost a lot to do all this, guys. All the support staff I have. Thank you for everybody that had put money into super chats. Thank you for all the questions. Love all of you guys for supporting us on the channel. This is huge. This marks the end of the 12-year quantitative easing cycle. This is not small potatoes. This is huge for what is coming. That's why I did a live stream on it. And thank you everybody for attending. We will continue to cover this more. We will cover it, guys, on the channel. Until next time, this is Rob Keens, Gold Silver Pros. Keep on stacking.